CNBC TV18, embarking on a quarter century of excellence.
Hello and welcome to the CNBC TV18's Mumbai studio. I'm Sonal Bhutra and you're watching Your Stocks. This is a show where we answer all your stock queries with our special guests. Joining us today is Rajat Bose of RajatKBose.com and Sharad Avasthi, who's the head of PCG research at SMIFS, to answer all your stock queries. Gentlemen, good afternoon and thank you so much for joining us as always. So without wasting any time, let's get to the first query that we are getting today. It's an SMS. Bharti Dave is writing to us from Mumbai. She holds 450 shares of Biocon at 375 rupees a share. And she asks if she can hold her shares for another 3 to 5 years. So basically, it's a long-term prospect that she's looking at. But before that, Rajat, let me come to you for a chart check, because right now she's making a loss of around 60,000 rupees. But technically, how is this share looking?
Technically, the stock is actually very close to its 5-year low. And the 5-year low is around 200 and currently it is at 240. This stock went up in between to about, say, 475 and then hit 200 kind of levels a few months earlier. And now on the weekly chart as well as on the daily chart, it is not showing that much bullishness, that much strength. Only if the stock manages to get past 300, only then you will see that real bullishness will come to it. But otherwise, I would say that holding this stock for 5 years, there are many other good stocks. If you hold them for 5 years, you would actually make much more money compared to this stock, because this stock is not showing any traction as to be moving up. 200-day, 50-day, 200-week, 50-week, 20-week moving averages are still slanting down. So there is no buy signal out here. So I can't recommend holding it for 5 years.
Okay, all right. No, of course, take that point, Rajat. But Sharad, let me come to you. What do you make of this stock from a 3 to 5 year perspective?
Yeah, I think it's a very good story to hold on. The biosimilar business and the biologics business is something we are very bullish on. And we believe that's the new place to go in pharma. And the area will see abnormal growth in the years to come. The company has already established some products in US and Europe, and they have the largest basket of around 28 products which are to be launched in the biosimilar space. They're already in advanced stages of working on them. So I think the big overhang after the Viatris acquisition is the debt part of it. Part of it should be addressed over the next 1.5 years as the BBL issue comes out and they're able to raise money out of that. And I think gradually over the next 2 years, you will see substantial improvement in the earnings also. And once that starts happening and the debt overhang also reduces over the next 1.5 year, I think there is a possibility that this stock will see very substantial re-rating. I'm very bullish on the stock. And I think FY26, we should easily see an earnings of somewhere around 20 rupees. And the Viatris acquisition should not have much of a problem regarding M&A banks, because they have already been working with them on one part of the business. So I think the acquisition banks would not be there. Debt remains an overhang, which should get addressed over the next 1.5 years. For the long term, I think even higher targets can be assumed. But even conservatively, if I'm looking at it, I think 20 times is very easily possible that Biocon can get. So initial targets of 400, but I think even 4 to 5 years, you could be looking at much higher prices. I think most people should hold on to Biocon as a very good long-term multi-bagger kind of idea.
Okay, all right. Thank you so much for that take. But moving on to the next one, Manjeet Kaursani is on the line from Chandigarh with a query. She has investments in Power Finance Corp and Power Grid. Go ahead, Ms. Manjeet.
Yeah, good afternoon. Yeah, I'm Manjeet. I'm holding the Power Finance Corporation for a very long time at 42.50, I think I picked up. And can you get me what would be the prospects, future prospects of this share?
Okay, all right. So that is on Power Finance Corp. The stock has done really well, and you've also made good profit on this particular stock. Power Grid also is doing well for you. So let me go to Sharad. What do you make of these stocks? Because the entire basket is doing well, be it PFC, be it REC, be it the new listing that is IRIDA. What would you suggest Ms. Sahani to do?
I think if you are happy with another 15% annualized kind of return, PFC is a story that you can hold for the next 5-6 years easily. If you model in 15% kind of advances growth, I think, and a 1.5 times price to book, I think long-term targets could be around 800. On FY28, we are modeling for a target of around 800 plus on the stock. But if you are someone who's looking at more aggressive bets and you think that a longer 5-7 year 15% CAGR is not decent enough for you, then if you discount that, I think 430, 450 at present value, if you get it in a month or two, you could book some profits. But in the long term, I think if you are happy with a 15% kind of return, this company should continue to grow. And these are returns leaving out dividends, which should be around what a 30% kind of payout should easily happen with the company. So long term, I think you should remain bullish. PFC is a good story to bet on. My initial targets are around 100 over the next 3-4 years. Beyond that, also, I think it should continue to do very well. Regarding Power Grid, again, temporarily, maybe if you are looking at a 1-2 year kind of horizon, maybe it has performed what it needed to do, and the valuations are more or less subtle. But I think the type of T&D expenditure that we are scheduled to see over the next 1.5-2 decades is going to be very substantial because of the renewable push, and the Power Grid should be in a very strong position to benefit out of that. But again, these are very long-term things. If you can hold for 10, 12, 15 years, then it makes a very good sense to hold on to Power Grid. But if you have a shorter horizon, I think maybe Power Grid is fully valued at these levels. And PFC, if you get around 450, 430, 450, that is where you should book. You could book some profits. But if you're happy with another 15% kind of return over the next 5-6 years, I think you could hold on to PFC for even higher targets of 800, 800 plus.
Okay, all right. So that is the fundamental outlook on these two stocks. Hope that answered your query, Misani. But technically, Rajat, what would you say of these two stocks? They've run up quite a bit.
The PFC is on a tear. And from 7th of September low of 205, and currently today it has posted an all-time high of 422. And since the investor has actually bought the stocks at a much lower price, I would suggest to continue to hold on, but do not buy afresh, because the short-term movement are pretty stretched. So there could be corrections where you can buy more, and only if you see, say, Power Grid falling below 160, or say PFC falling below, say 350 odd levels, then think of booking profits. Otherwise, carry on with the position.
Okay, all right, take that point. With that, let's move on to the next query. PN Giri is writing to us from New Delhi, holds 15 shares of Mphasis at 2,435.6 a share. He's a medium-term investor and wants to know whether the future prospects of this stock are positive or not. Sharad, come in on this. What would you say? Because it's absolutely flat for Mr. Giri right now, but the IT space in general is down today. What would you make of this particular mid-cap IT name?
I think the falling interest rate scenario is very positive for Mphasis. Once we settle into that zone in the US, I think 82% of their business comes from America, and around 55-60% comes from BFSI and insurance. So I think that is a space that would work very well. The re-ratings could be very sharp, because the downgrades have been very sharp over the last 1.5 years. The US was susceptible to a recession, and there were problems within the BFSI space. So I think once the interest rate cycle reverses, it should be very positive for them. In addition to that, they have already done some acquisitions, most probably Blink or something like that, which is primarily on the transformative side. So even in the short term, there has not been much of a hit in the numbers. They are working on that. And the dependence on one of the major clients or the parents, they have reduced that also. They're also looking at inorganic opportunities. So I think next year you could be looking at earnings of somewhere around 125, and it could easily trade at around 25 times. Some earning revision should also happen. So I think around 3,000, 3,100 could be the target that you could look at.
Okay, all right. Thanks for that. Moving on to the next one, Thomas George Chirail is writing to us from Kochi, who has 100 shares of Hitachi Energy at 1,805 rupees a share since August 2021. Okay, that's a big up move that he's seen from those levels. Wants to know whether he should book profit or stay invested. He says he can hold his shares for another 3 to 4 years. Before we do the fundamental check, let me come to you, Rajat. What do you make of this stock? Because it's seen a phenomenal move, has been an outperformer for the last couple of trading sessions as well. Do you think that will continue, or there could be a medium-term pause?
You see, when you look at technically whether a stock will continue in its upswing or downswing, I generally take recourse to Bollinger Bands and moving averages. Here, what is it is suggesting is that even the short-term trend is up, long-term trend is up, and intermediate trend is somewhat sideways, but that is also turning positive. So I suggest continuing to hold on to this stock with the stop below the 200 exponential moving average, which is currently at the moment it is at say 4100. So that's a pretty big stop loss because I want him to hold on with since the stock shows enormous strength.
Okay, all right. And Sharad, what about you?
Yeah, I also think it's an excellent proposition to hold on to. Valuations might look a bit stretched at current prices, but I think they have a 7,500 crore order book. They are working on railways electrification. They are working on renewables, grid transformation. As I was talking earlier regarding power grid, they are also working in the same space. And I think the advent of renewable is creating substantial opportunities on the grid improvement that needs to be done and the grid maintenance. So I think that is where Hitachi would come in very handy, and the future order book growth could be very strong as well. The company itself has guided for double-digit margins from around 5% right now. So most of the earnings growth in the initial phase can only come from margin improvements, which are expected to roughly double from current levels. Beyond this, the parent has bought a stake in something called Global Logic, which is to be used for monetization of 5G infrastructure for the B2B propositions. I think that is somewhere that will also be a very high growth place for the company. So all in all, I think the valuations might look expensive. We are expecting FY26 earnings to be around 135-40 rupees. And based on that, if you want to target, I think 5,500, 6,000. But I think this is a story that should be held on to. Valuations might look haywire here and there occasionally, but the type of growth we are seeing on the grid side, on the renewable side, on the railway side, add to it the 5G kind of 5G advent and the opportunities that come out of it. I think this is a very strong proposition that you need to hold on. If he has a 3 to 5 year, 4 to 5 year horizon, I think he should continue to hold irrespective of targets.
Okay, all right. By the way, look at the markets. There's been a substantial recovery from the lows. The Nifty is off around 117 points from the lows of the day. The high for the day was 20,936. The low was around 20,769. So it's off those levels. And there's a big surge that we're seeing in last couple of trading minutes. And it is actually led by the Bank Nifty. So that should come up for you on the screen as well. That's seen a bit of recovery, and that is leading to the recovery that we're seeing on the Nifty right now. It is absolutely flat, but those losses have recovered, and some of the stocks which have come to the high point of the day include the likes of Power Grid, which we discussed just a while back. Consumption names are also contributing to this. So the likes of Britannia, there is Tata Consumer. All these stocks are higher at the high point of the day. So we will keep discussing markets and your queries as well. For now, we'll take a quick break. When we come back, we'll take up some more queries. Stay tuned for that.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Your Stocks. We still have with us Rajat, Bose and Sharad Avasthi to answer all your stock queries. Well, let's talk about the next query, because Sandeep Tripathi is writing to us from Uttar Pradesh, holds 35,000 shares of Bank of Maharashtra at 32 rupees a share, making good profit there as well. He wants to know whether to book his profits or stay invested. Sharad, come in on this. How do you look at the stock?
It's a good story. The way the GNPAs have been maintained at a decent level, they have grown at a decent level. They are expected to grow at a decent level around 15-20% easily over the next 2-3 years. But I think valuation-wise, 20-21% kind of growth should easily happen. Next few quarters, there might be some recovery from the NPA write-offs as well, which could further boost numbers. But we are working with price book value of somewhere around 30 for FY25-26. And based on 1.5 times, I think 40-45 is fairly valued for the company. So from these prices, I can't see much of an upside coming into Bank of Maharashtra. So I think it's better that he books his profits and gets out at current levels.
Okay, all right. So that is on Bank of Maharashtra. Moving on to the next query now. Harita Vasla writes to us from Delhi. She holds 300 shares of Aarti Industries at 909 rupees a share. Wants to know whether to book her profits or exit at current levels. Well, she's not making profits at current levels. 909 rupees a share is what she bought them at, and the stock is right now at 569 rupees a share. Rajat, before I do a fundamental check, how do you look at Aarti Industries or any of these chemical stocks? What is your take? Do you think they have bottomed out, or you think there could be some more pressure?
Well, from a technical point of view, Aarti Industries, I would say that it is showing a bullish crossover with 20-day and 9-day moving averages. That means there would be some kind of bullish traction and it can move up. But the problem here is this, that this stock is not showing that much strength otherwise. It can move up, but at every rise, it can actually encounter a lot of selling pressure. Another thing is that barring March 2022, its return on capital employed performance is pretty bad. So I don't know whether one should continue to hold on. From a technical point of view, one may put a stop loss below, say, 510 and continue to hold on. But I don't really see much of a bright prospect right away. It may be over the long term that will happen. And regarding chemical stocks, I would say that most of the chemical stocks are suffering at the moment. And some of them, like SRF, may continue to take some more time before it gets traction.
Okay, all right. So that is the technical view. But Sharad, coming on this, what do you make of the stock, or do you like anything else from the chemical space right now?
No, we do believe that it's more or less bottomed out. Most of the companies, if you look at them, they have put in a lot of effort in terms of the capex that they have over the next 1 or 2 years. I believe most of it will materialize over the next 12 to 18 months. So there are many names that we like within the space. But coming back to Aarti, I think the project, they have a lot of companies in the European area. They have a lot of exports in the European region, and the region per se had been under some trouble. But I think more or less the pangs are over for most chemical companies. So Aarti Industries, we are expecting that most of the polymer business, they mostly cater to the polymer business. Europe is around 11-12% of the business. So these businesses should normalize over the next 1.5 year. And I think the raw material side of the pressure on the raw materials would also ease out as China normalizes. So next year we are expecting an earnings of somewhere around FY26. You could expect somewhere around 35 rupees, and a 20 kind of multiple is easily possible. So initially, I think start with a target of around 700. Her price is a bit on the higher side, so it might take time. Regarding other names we like, I think Naveen, after this decent correction, looks like a decent bet long term. I don't think much has changed. Though Rajat has a different view on SRF, I even think SRF is a good name to hold on long term. And beyond this, I think even Deepak Nitrite could be a good name to hold on. So most of the fluoro players, I think that is where you would have some improvement over the years to come. And most of them have some capex or the other coming out. Among the smaller names, I think Balaji Amines is a very good beaten down story. That could see substantial improvement going ahead as well.
Okay, all right. So that is on some of the chemical names that Sharad likes. Moving on to the next one. K. Devi writes to us from Chennai. He holds 45 shares of Coffee Day Enterprises at 328 rupees a share. Long-term investor, but wants to know whether to book her losses right now or to stay invested. But before I talk about that, Rajat, we don't talk about the stock a lot. But 54 rupee is the price right now. It's up around 3%. What do you make of this one?
See, here is one stock where investors have got very disappointed n number of times. That it was said that the date would be taken care of soon enough and all such things. And now it has, over the last 3 trading sessions, including today, it has jumped from 45 to 55, 54 kind of levels. But it needs to take out 57.50 decisively, only then it can move up further. But I do not have much hope for this. There was a time at lower levels I bought and I exited because this did not show much of a prospect. It started going down. That's why I got out of it, and I'm not recommending it. But above 57.50, maybe it will move up.
Okay, all right. Thank you, gentlemen, for joining us today and taking us through all your queries and the answers as well. So that's all we have on the show right now. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
CNBC-TV18, embarking on a quarter century of excellence.